meantime, I want to get to the economic numbers that came out about 8 minutes ago. We just got that GDP revision in at 5.9%. That was a bit higher than the initial read, so some good news there. Plus, the markets, though, are watching several other key figures out later this morning. And here to take a look at all of that data is Guy Lebas. He's the chief fixed income strategist with Janney Montgomery Scott, who barely, made it back to Philadelphia in the snow. Okay, so what do you make of these numbers? Because as Mike was just explaining, a lot of this has to do with sort of that drawing down of the inventories. And the question, of course, is how much is that going to really play through in the current quarter? And what are you seeing?
Well, inventories tends to be somewhat of a temporary phenomenon. They go up, they go down, but in the long run, they're not really the source of what we describe as kind of core activity. What we were hoping for was greater consumer activity. That's really the #1 thing that would get us more positive about economic conditions. But this revision is really just more of the same, more focused on inventories and these non-core parts of economic growth.
Almost a non-event, because you actually saw personal consumption coming in a bit lower than expected in that revision.
A little bit lower. I think one of the only reasons the total number was a little bit higher was because inflation was lower, and the GDP numbers that we report are net of inflation typically.
So what does this set us up for then, Guy, for the first quarter? Are we going to see a big drop-off then from the fourth?
Well, I would expect to see much slower level of growth, though still a positive number. As you kind of indicated earlier, the weather actually is playing out to be a fairly major factor, and we saw that in a big drop in consumer confidence just earlier this week. People are staying home rather than going out to the stores to buy, and that kind of compounds the problem of what's already a pretty weak consumer to begin with.
Is it a major impact? Because you heard Bernanke yesterday in his testimony, recognize that the snowstorms are going to impact the January numbers, but he seemed to downplay that a little bit. He seemed to say, look, it's going to be a factor, but it's not going to be a big factor. Why do you differ?
Well, it's very challenging to estimate how much weather impacts the markets or impacts financial numbers. But right now, we believe that consumer sentiment in particular is such a huge driver of the potential for economic activity. When people don't have jobs, when the jobless rate is as high as it is, the only thing keeping them going is a little bit of optimism. And snowstorms and this sort of weather that we've been experiencing in the Northeast really dampens down that optimism. That's why we think it might have an outsized impact.
But that kind of leaves us, Guy, sort of grappling for how to interpret all this data, because some might be affected by snow, some might not be as much. And so we're kind of lost right now in terms of where we are in the economy, no? Because a lot of our data is going to be affected by the snow.
Absolutely, and it's a sort of short-term phenomena that doesn't allow us to drag a real long-term picture out of what's happening today. One thing I would suggest focusing on are the jobless numbers, because February in particular tends to be a month when a lot of retailers go out of business and a lot of jobs are lost that way. And that's a more consistent, little bit of a longer-term indicator. So keeping a very close eye on those numbers.
Okay, maybe a bit more accurate at this point. Okay, Guy, just tell me in terms of some of that data we're getting later this morning. Chicago Purchasing Managers Index and also existing home sales. Very key, that last one I talked about. And also consumer confidence from the University of Michigan. What's going to stand out to you today?
I think what's going to stand out is really existing home sales. With the data we're getting now for January, pretty much all of the oomph from late 2009 driven by the original expiration date of the government's home buyer stimulus package, all that oomph has sort of exited the markets. So now we get to see whether home sales are going to be consistently stable or whether that oomph, that stimulus, provided a really big impact. Our bet is that we actually see something of stability in the month of January.
Guy, good to talk with you. Thanks so much. Guy Lebas of Janney Montgomery Scott.